This is my bitch. I run this coin. Basically, it's one of the coins, for whatever reason, I've been able to short highs and long bottoms. It trades really algorithmically, so you don't have to really panic about crazy moves in either direction. I think it's liquid enough, and the algos that are trading it are pretty rigid in terms of the logic, so the moves are very predictable. We're gonna go through a quick top-down analysis, and I'll show you guys the setup I'm watching as of now. So this is the monthly chart. It looks really healthy. I mean, yeah, this is a lower high than that, but that could be the midpoint or the corrective retracement of this dealing range, which would create a higher low and then expand to the 886 minimum. So on the monthly, this could end up being a massive monthly harmonic. So that's your 50% corrective retracement. Let's say it takes the lows here. You get a 786. And then you would be targeting the 886. This could end up being what Scott Carney calls a perfect bat, meaning just the ratios of the corrective retracements and the projections are very well aligned. So they're very balanced, meaning that first retracement was around 50%. The second higher low, or the higher low, ends up being between the 618, 786. Your 886 is the final wave of the harmonic, and the B to C projection to the 200. So this would be a perfect bat on the monthly. So anyway, that's a quick harmonic lesson on why, even though this is a lower high, substantially lower high, this could still be setting up for a much larger wave. On the monthly, there's a huge monthly inefficiency here, which we backfilled now 50%. So right here, the middle is right there, we tagged. And that being the case, after taking this external, internal, we're now targeting the external high way up here. And 50% of this monthly dealing range is where we rejected. So it was natural to come down here. Now you're just looking for a bottom to come in on the monthly and maybe bi-weekly, then a much larger push up into the 50s, 60s, depending on how high it wants to run. So on the weekly, you have a weekly external low nuked, a shift above these highs, like pretty strong displacement, and then a pullback into the OTE cluster. So one of my findings in the last year of trading is typically when you form an optimal trade entry cluster, meaning you fib from the low to the high and it lands somewhere between the 618, 786. If you start pooling liquidity in the range like this, typically they get flushed right before the real move. So that's why I call this the OTE cluster. It usually clusters a bunch of liquidity in the range, and then you're looking for a flush for the move up. So this is kind of building the case for one last raid of the lows or a sweep of all this engineered liquidity before a move up. Regardless, after shifting over here and a pullback into the OTE, you're now targeting up here, the external high. Keep in mind that half the monthly imbalance was rebalanced and the weekly imbalance has been filled, this one right here. So there is one more insignificant one here and a bit of a larger one down here. If we go down here, Bitcoin is at 44K, so I'm not really interested in that one right now. It could tag into here, and I'll show you in a minute what I see. Daily, you had a daily imbalance. You had two, but this one was tagged. It was rebalanced in real time. This one was the one that was left behind. We basically filled the whole thing. And then that wick, we had a daily wick midfill, meaning it filled half this wick, which is usually a pretty good sign. After taking the internal range right here, you're targeting now up here. So 35.10 minimum, which would be the midpoint of the full dealing range. So this is now aligned with the weekly and the monthly. We're all targeting higher. And then the 4 hour, we'll just drop it one more time. You now have equal highs up here. You have a 4-hour imbalance here. So your draw on liquidity is really strong to the upside. But this is where the trade setup comes in. Until you purge these equal lows, I don't think we have a draw yet up here. I mean, I don't think our bias is up yet. Until these get taken out, my magnet is still down here. Once that gets taken out, now your 4-hour bias is going to be up, and it will be aligned with the higher time frame daily, weekly, monthly. So this is kind of the framework for how I'm taking this trade. And now we'll jump into the actual setup. All right, so here's some core assets just to pay attention to. You have a high volume node here. We basically clustered here and then broke well above. If it ever came back into this zone, this would be a buy zone because it's basically well-developed structure supported by volume. I pointed out the weekly internal just below this engineered liquidity pool, so that could be the draw. We might get one more push into there, so just be aware. And this is the actual trade setup that I'm looking to get into. So typically before you reverse price action into the strong draw on liquidity, which is going to be higher, you'll have an accumulation where this is allowing big money to start accumulating a position in discount within a range. So if you look at the higher time frame range from up here to here, this is in deep discount right now. If you look at the local intraday range from here to here, this is going back into deep discount. So this is where typically smart money will start accumulating the position. Now, to get a bottom, normally you don't just do a reversal. It should be taking out some form of liquidity before starting to run up and reversing. So what I'm looking for in the range is these perfect equal lows to get rinsed, and that would represent our manipulation within this AMD model, which is simply accumulate, manipulate, distribute higher into your drawn liquidity, which is going to be that imbalance and this huge liquidity pool. So overall, this trade, depending on when you get in, I mean, you could get in on the wick here, but I would only go in light on the manipulation because remember, there's a weekly imbalance right below. So it might actually go down another 10%. But, you know, for more experienced traders, you could do that. You just have to look for low time frame support or order flow to shift. And then the safer entry will be when they take these lows out on the manipulation, when it reclaims those equal lows, I'd be looking to long a reclaim when it's showing some strength. And that would be a 42% move. So if you zoom out, that's not even a fraction of the full move. Like I'm actually trying to trade into these highs, the $49 mark right over here. It's part of a larger model, but also you have a bit of a falling wedge. So I think once it breaks this supply line, you're probably going to reprice pretty heavy and a lot of bids are going to come in. So the actual trade setup is on the 4-hour time frame. It's supported by the higher time frames, and all I need to actually go long on this would be one more flush of the range representing the manipulation in the zone, and then I want to see buyers absorbing inside of this. It could go deeper, so that's why I have a larger red box, because if you zoom out, there's an external low right here. So it might not necessarily just stop below these lows. It might actually target this. And the reason I say that is these are open wicks. A lot of guys in the Discords know that I talk about open wicks and outside wicks. If the last wick on low time frame in the range did this, that would mean on lower time frame, 15 minute, 30 minute, that they flushed all this, and that inside wick should be considered a protected low. But because these are all open liquidity with liquidity stacked under 1609, it might just drive down a little further than expected. So that's why I say don't get too eager to get into a move until it proves to you that, okay, that's the bottom is put in and you have a discernible stop. Otherwise, if you just catch the knife, it might actually go for these, and then, you know, breakdown shorts might start piling in, pushing the price even lower by another 10%. So that would represent like a 20% drop below these lows, and you don't want to be trapped in a position like that. That could really bust your account. Okay, that's AR. Again, I have a 90% win rate on this coin. Every time I take a swing, it tends to be at the extremities, so either the external high or external low, and that's how you can basically capitalize on the full range on the higher time frame. So hopefully we get this one. I'll alert if I actually take the trade or if I see the setup developing. All right, guys, cheers.